Hello everyone, my name is Rodney Clements and welcome back. We are in webcast series number 4, implementing OMB's new uniform guidance for the ICDBG and IHBG programs. This is webcast series number 4 of 9, subpart D, post-federal award requirements, the standards for financial and program management. Also, just want to remind everybody this is the 4th in a series of 9 segments that we put together for the training on the uniform guidance. Also, just to remind you of our supplemental webcast resources that are available for you to download as we go through the training, each training segment. So, quick pop quiz. Who remembers where the former requirements were located in the old regulations? Anybody got it?
24 CFR Part 85.
Point for extra bonus points.
36.
Huh?
36.
36 is procurement. Point 20. I remember it back in the day when we were always going over the regulations. It's like 85.20, going through the checklist, making sure we had everything in place for the financial management requirements. Okay, so what we're going to be focused on in this segment is what has changed. So we knew you're used to 85.20, so what changed with the new section now that's located at 300 through 316. So we want to focus what really has changed for us. Does it matter? Is there any impacts that we need to be aware of? And there's a couple of things. The good news, nothing huge that's going to shake our world, but a couple of things that we do need to pay attention to and may require some additional action when we go back home and implement this. Okay, so first, before we actually jump into what changes have been made in the new uniform guidance, I would like to take this time just to show you a couple of the documents that's in your book to make sure that you understand what's there, how it could be used as a job aid for you when you go to. Bottom line is you're all looking at, hey, just tell me what I need to do. What changed and what do I need to do? So the attempt is to try to do some job aids to help you, create a checklist to say, hey, are we meeting this requirement? And you can kind of follow through that checklist and make sure that your systems, your financial management systems are sufficient to meet these standards. So the first thing that I'd like you to look for, if you look in your tab under the document that is called the side-by-side comparison chart, subpart D. And so what we did in this project is to really take the uniform guidance, put it in an Excel worksheet, just as it's stated, and in the right column put the older regulations, the Part 85 regulations, and so we could do a side-by-side comparison to really see what changed. So the document that you're looking for is called the side-by-side comparison chart, or crosswalk, and we're looking in this segment at subpart D. So that's one document. As I'm going through this, you can actually follow down with me on that, or if you like, you can follow through the normal, the regular printed copy we have for you of the uniform guidance itself. So either way. The other tool that I'd like to have for you to have side by side here with us as we go through this is the document that we call the Assessing the OMB Uniform Guidance Changes, Implications, and Recommendations for our HUD ONAP recipients. So if you find that in your tab, if you pull that out, let me explain what this tool is. This is just a subject, what the changes, one column is the subject, so it's a broad category subject. The next column is the changes that were enacted by the uniform guidance. The last column you'll see is a short discussion of what is the implications of that change and our recommendation because of that change. So as we go through these, if you have this side by side, you'll see once we get to 302A, paragraph B, we'll analyze the change. You'll see we'll have a recommended action for that change, if any. Some of these is just going to be what we're going to see in this segment, that a lot of the language is just expanded. It's just made it's made more clear to us what is intended, a lot more clarity. So that's a good thing. But there are a few changes that do result in, that are going to require some action on our part. So let's get started and see what we got here. First paragraph A and B. These are new statements, new policy statements that are here in this section. They weren't in the former regs under 8520. So there are a comparison of the responsibility really of what the role of the federal agency versus the role of the non-federal entity. Speaking of non-federal entity, how many have recognized that you haven't seen the word grantee in the uniform guidance anywhere? It's been completely eliminated. And so let's take a quick look at the definition. So David did such a good job teaching us how to grab the definition. Someone will look up non-federal entity and give me that definition. Non-federal entity. It kind of has its own, you kind of understand its meaning by its word, right?
Non-federal entity means a state, local government, Indian tribe, institute of higher education, or nonprofit organization that carries out a federal award as a recipient or subrecipient.
So if you're an Indian Housing Block Grant recipient, we have a very specific meaning for that. NAHASDA defines recipient for us. And so it's a different thing here. So we're not going to see the word grantee or recipient in the uniform guidance. It's always going to be non-federal entity. Okay, so let's take a look at what are those policy statements that are added here in sections A and B for the federal agency versus the non-federal entity. So the first statement that they emphasize for federal agencies is that they must manage and administer the federal award, ensure that it's implemented in full accordance with the U.S. statutory and public policy requirements, and then make sure that they communicate that to the non-federal entity all relevant public policy requirements. So on our side, for the non-federal entity, our responsibility, the policy statement says, is to comply, of course, with all of the requirements of the federal award. But also there's this interesting inserts in there and some references in there where it says submit a FFATA, Federal Funding Accountability Transparency Act. The FFATA has been around since actually 2005, which includes some reporting data on subawards and executive compensation. And you'll notice actually in this paragraph it references and incorporates the requirements of 2 CFR 170. So specifically what that means is a management system to ensure that the FFATA subaward, if you are a subrecipient and you are a pass-through entity and you give a subaward that's greater than $25,000, it's going to trigger some requirements for you to report that information on the FFATA subaward reporting system. And it has to be done within the month following that you made the award. And also, as part of the executive compensation, this is going to apply to very few tribes, but the statement is, the requirement in 2 CFR 170 is that we're required to report on total compensation of our top 5 executives. It's applicable only if more than 80% of our annual gross revenues are from the federal government, and those revenues are greater than 25 million annually. So that's going to limit the application of tribes for that, but it is a requirement if you meet that criteria that you would need to comply with. Next paragraph, next section, here's a whole new section on 200-301 on performance measurement. Again, not something that that's going to require us to do something, but it just reinforces the point that recipients the agency actually is required is mandated to relate financial data to performance accomplishments and demonstrate cost effectiveness. The intent here is really to make sure that grant programs are achieving a program-specific outcome. So it's, again, not about, it's getting away from compliance. It's more about, well, what are we actually getting done with these federal funds? And so we have all seen the changes in our IHP, APR combined, and we can see that HUD has already, ONAP has already implemented many of these changes, where now we're being able to actually link dollars spent on a specific outcome objective that we're achieving under our IHP. So many of these things have already been implemented. Again, it's also saying we want you to, the data should be measured in a way to help improve program outcomes. So share lessons learned, spread the adoption of promising practices. So kind of an ideal statement, but that's the intent that the uniform guidance is saying for the agencies. Hey, make sure what you do has a way of, if we're doing something good, how do we replicate it and make sure we continue that? 302B, now we're going to a section that we've seen before. And so this is where 8520, the old regulations in 8520 kind of picked up, and we're more aware of this language. So essentially what has happened here is some rearranging of the text and a couple of new sentences that got added, in some cases diminished in some way. But so let's cover it. So here's the things that you'll recognize. 302B, the management system must still include accurate, complete, current financial results of all awards, the source and application of funds of all federally funded activities, effective control over and accountability of all funds, property, and other assets, and then a comparison of expenditures with your budgets. So how do we measure that? Does our system allow us to do that? A couple of things you might notice if you're going through the text, you can see there's a section that used to describe the source documentation as canceled checks, paid bills, payrolls, time and data, records and contracts. All those examples have been removed from the language, and it just simply says source documentation. So it's sort of inferred it could mean all of those things, and it could mean other things as well, but the examples have been removed. So what's changed? So here's the new things we've highlighted for you. First one, identification, and it's paragraph 1 under 302B. And you might recognize it. So it says, let me grab my text here. Identification in its accounts of all federal awards received and expended and the federal programs under which they were received. Federal program, federal award identification must include, as applicable, the CFDA catalog federal domestic assistance title and number, the federal award identification number and year, name of the federal agency, and the name of the pass-through entity, if any. So if you're a subrecipient, it would name your pass-through entity. So anybody recognize that data where you've seen that before? So all my fiscal people, you would probably say, oh yeah, that's the CFA, right? The Schedule of Expenditures for Federal Awards that we have to provide to our auditor every year. So at the end of the year, so this language got moved right from A133 into this section under financial management and subpart D, which is logical because, yeah, why it shouldn't be. We don't talk about this at the end of when we're awarding or auditing. We want to know we're setting up our financial management systems. It should be at the beginning. So logical change and a good change, I think. So the implication here, application for this is to make sure your financial management system is set up to track this data. Not at the end of a fiscal year. But when that award comes into your office, it needs to be part of your procedures to input that either into your accounting system, chart of accounts, however you currently identify that on a spreadsheet. That data needs to be able to be presented to an auditor or HUD staff on demand. Next thing, right. Sorry. So the next thing, so that's the big change. The next big couple changes are two different written procedures that are new language for us. Content is still the same. It formerly said, it didn't say written procedure, it just said procedures for implementing, minimizing the time of transfer of funds between receiving the funds and disbursement. So now it just simply references procedures to implement requirements of 200-305, which is the how we make our payments. The second procedure is written procedures for determining allowability of cost, subpart E. So this is where we kind of think that's going to be a little bit of an impact for folks. Sometimes I hear in the trainings that we've done so far that some folks are, well, we have a very established procedure. Yeah, so-and-so is very knowledgeable of the cost principles, and our fiscal officer and has been doing this for a long time, and if he sees anything, then he will alert, the executive director, and, it gets caught, So the question, that's great if you have that. Question then is it written? Is that actually somewhere written, who, what, where, when, and how, So it's got to be a procedure that says, who's assigned that responsibility, who has accountability for making that determination. So anyway, just want to emphasize that's probably the most dramatic change with these revisions, is that we have to make sure we actually have a written procedure for both payments and for allowability of cost. I think it's going to be kind of interesting to see some of the trainings we've done. We've had folks kind of talk about, some folks, they say that they think they have it embedded in their accounting procedures, that they have that accounted for, and they can demonstrate a written procedure. Others are like, yeah, we're going to have to write that. So, I think it's going to be good, because ultimately what this is about, and we'll get to that next, is about internal controls. The whole really larger emphasis of the uniform guidance, as I see it, is about internal controls. And that's the systems that we have in place to prevent us from making mistakes on our behalf. So I think that's what's really important here, is to go, hey, we don't want a procedure for a procedure's sake, but we want a procedure that really allows us to catch mistakes. So if we are getting ready to write out a check to donate money to our local youth group, somebody can say, hey, you know what, donations are not allowed. That's unallowable under subpart E, and they can cite the citation, and we go, oh, okay, well, we made it we almost dodged the bullet there. So, some new language added in B2, paragraph B2. Let's take a look at that. It has to do with reporting on an accrual basis or a cash basis. So this could be, for all my fiscal people, my non-fiscal people, just as a refreshing of your memory. Accounting for accrual is when we record the revenue and expenses when they are incurred, regardless of when the cash is at hand. If we have a cash accounting system, we don't account for that or record that cash until it's actually in our hand. So difference between accrual and cash basis of accounting. What this language is saying here, if a federal awarding agency or pass-through, again, another emphasis on pass-through entity, is the agency cannot require you to change your accounting system to accrual. If you are cash, then the agency must allow you to develop your reporting on your accrual data based on analysis of documentation on hand. In other words, translate your cash reports and put them into a accrual-based form for 425 reports, APR reports, etc. And so the emphasis here too, if you are a subrecipient or a pass-through entity, make sure you're not, take a look at your subrecipient agreements, make sure you're not requiring your subrecipient to change their accounting system into an accrual accounting system. Any questions on that? Is that okay? Okay. Okay, next section, 303. Interesting change or some new language here that's kind of interesting for us to take a look at here. And this section in red is the new language. So the language says that we must establish, maintain, so that again, I want to, before we go into this section, remind you what David shared earlier about the difference between should and must. This is where it really means something because there is both must and should in this paragraph. So the must is we must establish and maintain effective internal controls over the federal award, providing reasonable assurance that it's being managed in compliance with statutes, regulations, and the terms of award. That's our must. The should is internal controls should be in compliance with guidance in standards for internal control in the federal government. So that's a document otherwise known as the Green Book. It's issued by the Comptroller General of the United States. You can go on website, Google that, and you can have it at your fingertips right away for free, download it. The other document that they reference here is the Internal Control Integrated Framework. So it was issued by, and this is a mouthful, Committee of Sponsoring Organizations of the Treadway Commission, otherwise known as COSO. COSO has been around for a long time, since the 70s. So the framework, basically 5 components of the framework, which are control environment, risk assessment, control activities, information and communication, and monitoring. And along that, with that, 17 principles under each of those. That's been around for a long time. And in fact, you've probably, if you've had audit findings in the past, you've in some way you've used or it's been referenced in your audit. And we've had to put a corrective action in place based on a principle or framework from one of these 2 documents. So again, so what this is saying is internal controls should be in compliance. So it's now, how many knows that auditors, when they see should, that's like, you better do it, right? Because why not? You should do it. And so that's why it's really important to understand the clarification. There might have to be some communication with your auditor if they come back and say, hey, you're not in compliance with COSO. You can say, hey, well, that's a best practice, that's a recommended best practice under COFAR. And then there's the fact document. So if you look at the document that we have assessing the OMB guidance, uniform guidance, I actually have the citation for you for that. It's on page 5 of that document, of the assessing the uniform guidance changes, implications, and recommendations. So COFAR fact number 303-3. So COFAR, what they did, it's really helpful, is because all the federal agencies are struggling to make sense of the uniform guidance with the new changes, what changed. So they've established the frequently asked questions document, and they keep updating it when new questions come, and it's well done, and it's a great index by subject, so you can go and find things that, and so that's where this direction comes from in the COFAR specifically. So you may have to show that to your auditor, say, oh no, this means best practice, recommended best practice. This doesn't mean that we must have it. The must is that we must have effective internal controls. So, if there is an issue, you're gonna have to use something from COSO to actually make a change in your policy, who does what, your procedure, et cetera. So what we're recommending, bottom line, is that you take this time to do some further deeper dive in the training on the Green Book and the COSO framework. We can't do that in this training, but we recommend that you take this opportunity to actually to initiate within your agency some further training into that. Bottom line is, might as well do it now rather than later when the audit hits. And so the interesting thing to point out, if you will look at that segment, if you go to page 5 on that document, assessing the OMB uniform guidance, changes, implications. I just want to read something real quick. It says, while non-federal entities must have effective internal control, there is no expectation or requirement that the non-federal entity document or evaluate internal controls prescriptively in accordance with these 3 documents, or that the non-federal entity or auditor reconcile technical differences between them. So they are provided solely to alert the non-federal entity to source documents for best practices. So here's the key thing I want to point out to you. Non-federal entities and their auditors will need to exercise judgment in determining the most appropriate and cost-effective internal control in a given environment or circumstance to provide reasonable assurance for compliance with federal program requirements. So bottom line is, if you get yourself in an audit finding, it's going to be an internal control issue. It's a dialogue that you need to have around these documents with your auditor as to what would be with these within the framework, what is the appropriate control or internal control that we need to implement or procedure we need to implement in order to be more effective and more in compliance. Okay, so that's a recommendation. Take this chance to do a deeper dive into the COSO framework or Green Book. What's next? Three new sentences here in paragraphs B through D that weren't in our former regulations. Evaluate and monitor the non-federal entities' compliance with statute, regulations, and the terms and conditions of federal awards. Take prompt action when non-compliance identified. That's one of the things I've seen. We'll talk about that in the audit session. Again, we have to take, the new language is no, don't wait 6 months to take corrective action when there's an audit issue or non-compliance. Take immediate action. So that's added language that reinforces that. And then also take reasonable measures to safeguard protected, personally identifiable, or sensitive information. So this is, again, taking us into the 21st century of, the realities of theft identity. And so we have that responsibility to make sure we're protecting sensitive information within our organizations. 304, a new section also, bonding. So again, just makes it clear that the agency has the authority when they guarantee or insure a loan. If they think it's inadequately protected, they have the ability to require additional bonding. Fidelity bonds that have to do with fraudulent acts or dishonest acts of employees, they may require that. So what we're saying here, HUD reserves the right to require additional bonding, but also cross-reference 325 and specifically the applicable exceptions of 1026 and 812 for the Indian Housing Block Grant, and then 24 CFR 1003-501A8, which are the additional bonding requirements, program-specific bonding requirements under procurement. So we'll be covering that in the next segment on procurement, but those are those exceptions that we've had. So we have the additional ways that we can do bonding with our contractors. We have some exceptions from the uniform guidance. Those still stand. So 305B, next section, payments. Again, this is where one of those places where it's just expanded language. The actual, when you really break this down, there's not really some really new language, I think, just further clarification. So again, minimizing time of transfer funds applies to pass-through entities as well. So that keeping that minimizing that time from receipt to disbursement, it applies as well for our non-federal pass-through entities. And then also new language, whether the payment is made by electronic funds, transfer, issuance, redemption of checks, warrants, or payment by other means. So it just says, however the payments are made, this standard applies. So for our case, this is very well regulated, and we have a tight system under the lock system for all of our grants, so it's really not a big change for us in ICDBG or IHBG. There is this new language on the timing of the advance that was added in here. Now they're saying as close as is administratively feasible to the actual disbursements. So in HUD, this has been well established under program guidance, PIH notices. We all are familiar with the 3-day rule, and that's HUD's standard for really interpreting or enforcing this language here, which is close as administratively feasible. It also, new language that it points out that when you're doing a drawdown, it's also what would be the proportionate share of an allowable indirect cost. So we haven't discussed allowable costs, but if you are doing drawdowns for indirect cost, it's not the entire indirect cost for 6 months, it's the rate, it's based on that rate, it's the proportionate share of the allowable cost. You can draw that down. And then also the statement here is added in here, timely payment, that it's expected that you make timely payment to contractors in according with the contract provisions. In other words, we're not, in no way does this language prevent us from making timely payments to our contractors. Just to kind of reinforce this because this is always a big deal, program income, there is the provision in the uniform guidance, paragraph 5, that says the non-federal entity must disperse funds available from program income before requesting additional cash payments. So just to remind everyone that we have program-specific exceptions to this under 24 CFR 1026A3 for our Indian Housing Block Grant. So we are not required to expend program income before drawing down additional funds. So we have that specific program regulation. ICDBG, still does apply, as stated. This is a new section in here, and I think we struggled with really determining whether or not this was a change or not. It is new language. Standards governing the use of banks and other institutions as depositories. So this language is that awarding agency must not require separate depository accounts or establish eligibility requirements for them. However, the exception is that the entity must be able to account for the funds, the receipt, obligation, expenditure of funds. So if they don't have the ability or capacity to account for and keep, for what we're talking about in 302B, if they can't meet those standards, then this would be nullified. Advance payments must be placed in insured accounts whenever possible. And paragraph 8 got added on here too regarding that very same topic. Advance payments must be in interest-bearing accounts, and then they have some exceptions to that. If it's going to be less than $120,000 a year award, the anticipated interest earnings are less than $500 per year, or the minimum balance requirements of that bank make it not feasible. In other words, if you have to pay a bank a charge for that bank account to have a certain interest rate, but it's costing you money rather than earning money, then that would be the exclusion here. So the interesting thing too is this changed too. The interest up to $500, it used to be $100. So that amount was increased to $500. It can be retained for administrative expense. The interesting thing is that probably with the lock system and the 3-day rule, it's very unlikely that anybody's going to earn interest on their checking account, but it may happen. Bottom line, if it does, it's very clearly telling us that we must remit that interest. If it's over 500, we must remit that interest to the Department of Health and Human Services Payment Management System. And if you look at the guidance, there's the long detailed instructions with the banking routing number and everything in there for how we transmit or remit that interest back to the federal government. So, clarification, bottom line, note, it does not apply to the Indian Housing Block Grant recipients who have been approved to invest their IHBG funds under 24 CFR 1000.58. So that's a different process, program specific. If you're approved to invest your funds through HUD, then of course this provision would not apply. 309, period of performance, new section, not a lot of impact for us. Probably already covered, was covered in your terms and conditions of your grant, but again, just making it very clear to us that non-federal entity may charge to the federal award only allowable costs incurred during your period of performance, any costs incurred before or after. So again, this becomes more important again if you are a pass-through entity, to make sure that you are defining the period of performance in that award, when funds can be charged to that grant. 310, new section, insurance coverage. So it's new language for us in the uniform guidance. However, we have some program-specific requirements in 1000-136 that mandates adequate insurance regardless. So a lot of times, what you find in some of these regulations is that the program-specific regulations already address that requirement. So again, this is uniform guidance, so if it wasn't, then you would apply this. So 312, federally owned and exempt property, another new section. When we first were analyzing this, we kind of freaked out because we said, hey, wait, this is going to be a hassle to do all this reporting for federally zoned, and what's exempt property? So bottom line is we learned that HUD does not have ownership to federal ownership, and so therefore this rule or this provision is not applicable to our Indian Housing Block Grant or ICDBG recipients. Our property is not federally owned property, so that's an easy one. And then real property, again, this is kind of a new section in the conforming regulations that got published last year, December 7th, 2015. When you look at the administrative requirements that were listed there, this is one of the exceptions that says it does not apply except as provided in 24 CFR 5109. And so 5109 is HUD's policy for the equal participation of religious organizations in HUD's programs and activities. So it's to make sure that HUD funds are not used for programs or structures that are inherently religious activities. So if so, there has to be some cost accounting to separate that cost between those activities, eligible activities, and what would be an inherently religious activity. So that's kind of new for us. We didn't have that in the former exceptions under the former regs, so that came in effect December 7th, 2015. 313, equipment. So no change for us in program exceptions for the IHBG, ICBG. So same as always, it applies except in all cases in which the equipment is sold. The proceeds are program income. So there's the 2 citations. That hasn't changed. But there is some expanded language on this that we want to point out to you. So again, not a huge impact for us, but just so we know. Unless otherwise provided by statute, title must vest as a conditional title. So what we've come to learn is that that has always been in effect, that the equipment that we've purchased under using federal funds, it always had a conditional title. And the conditions are that the equipment should be used for authorized purposes. In that period of performance, we're not allowed to encumber that property without approval from the federal agency. And then here's where you have to do a little deciphering. We have to follow the use and disposition requirements of paragraphs B, C, and E. That can be a little confusing. If you look at the actual text, it's going, what? We have to separate, calculate how much money is going to be used, and we have to return that to the federal government. It can get a little confusing. The good news is that we have the exception for this, and is that we have this exception here that no, if you are going to dispose of that equipment or sell it, it's going to be program income. So we don't have to worry really about the disposition requirements of B, C, and E of that section. Interesting new language that got added here for us, a new order of priority for the use of the equipment when we no longer need that for the original program project. So this is going to really affect some of us because that happens. The training we were at last week, we heard that a similar scenario for this piece of equipment that the TDHE was no longer needing. So it's like, how can it be disposed of? What's the order priority? So this clarifies that the first order of priority is that it goes to the federal awarding agency which funded the original program or project. So if there's another federal program, so in this case IHBG doesn't need it, is there ICDBG or vice versa? That would be the first order of priority. After that, then it's federal awards from other federal awarding agencies. So, so that's where it could be disposed of to a program that is, say, funded under the BIA, another federal agency for the tribe. And so another language, again, includes consolidated equipment for information technology systems. Again, the thread through the uniform guidance is talking a lot about information systems, technology. When we get into cost principles, we'll see some new things like we were talking about with the definition for supplies. It includes now computer equipment that's under 5,000. That's a big change for us too. So, okay, couple things that's important for us to know here. A change for us under 314 supplies. There's new language for us in our program specific requirements that came out with the conforming amendments in the December 7th 2015 publication. And that's this requirement here, both for ICDBG and IHBG, except in all cases in which the supplies are sold, the proceeds shall be program income. So you might be asking, why did they do that? You know, that's the same as equipment, right? Why did we need to do that? Well, when you look at the new language under 314 for supplies, it might make a little more sense. The language is title to supplies will vest in the non-federal entity upon acquisition. So here's the key. If you see this language here where it says the project or program, it used to just say at the end of a grant. So whenever we wrapped up the end of that grant, then if there was leftover supplies, we would either give that to another program or federal program that we had in case, or we could sell it and dispose of it. So now it says really clearly that at the completion of the project or program and the supplies are not needed for any federal award, the non-federal entity must retain the supplies for use on other activities or sell them. The kicker here, it kills us, is, hey, but what? But must in either case compensate the federal government for its share. So it's like, are you serious? We got to count all of our supplies. And no, this is just clarifying. That's why it was important for this exception to be put in there. So this clarifies that if we do sell those supplies, in all cases in which we do sell those supplies, it would just be program income. So it's just going right back into your program. So we really don't expect, there's never going to be a time where you need to dispose of supplies and then compensate the federal government back for that in our cases. So if we have leftover lumber, we're going to use it on the next house, right? All right, last thing, we're almost done. 315, this is new for us. This was formally accepted for us under 8534. It did not apply, so it's not accepted in in the new exceptions that came out in December 215. But our assessment, it has little or no impact for us as Indian Housing Block Grant ICDBG programs. This is one of those implants or transplants that I think is more relevant to our our institutes of higher education for research grants. So basically, if we had copyright, patent, trademark, this addresses those intangible property and the requirements for how the federal government would manage that information. So that pretty much wraps up subpart D. That was a quick run through. Hopefully you got the relevant. Main thing, written procedures is kind of the key thing that's new that we need to do. Go back, do written procedures for the way we do cost payments, and then also for how we determine allowable cost. And then the other thing, recommendation, take a deeper dive into the COSO framework for internal controls. Take this opportunity to empower yourself to get more proficient in that. So ultimately it's going to improve your management systems and your efficiency as an organization. That's it.